Okay, let's unpack this. We are diving into what looks like a monumental industrial crisis.
Yeah.
And it's centered right in Italy, home to these, legendary brands like Fiat, Alfa Romeo, and Maserati.
It really is. The sources you send over, especially the data from the FIM-CISL trade union, they paint a very clear picture.
And one analyst called it a perfect storm.
That's a very apt description. This isn't just a bad quarter or a tough year. We are looking at a dramatic structural collapse in production, especially for the Stellantis group.
So our mission today is to get a handle on the scale of this, figure out why it's happening, and then look at the government's big response.
Exactly. And to grasp the scale, we have to start with the numbers for 2024. They're staggering.
Let's hear them.
In 2024, Stellantis' total vehicle production in Italy just plunged. It fell by 37% year on year.
37% in a single year.
Yes. From over 750,000 units in 2023 down to just around 475,000.
Wow. That's a massive contraction.
It is, but the real historical punchline is when you look just at passenger cars. That output fell by an even sharper 46%. And that single drop drags Italy's national production down to the lowest level they have on record since 1956.
Since 1956. I mean, that's not just a statistic. That feels like an industrial regression.
It is. Think about what 1956 was. It was an era of post-war recovery, long before Italy's economic miracle was even complete.
Right, a totally different world.
To go back to those volumes now, with modern supply chains and global brands, it just signifies a complete breakdown.
And the sources suggest it's not over.
Yeah.
If 2024 was devastating, what are the projections looking like for 2025?
They're bleaker. I mean, in the first 9 months of 2025, production was already down another 31.5% from the year before.
So the decline is accelerating.
It is. The union's estimate is that 2025 will close out at around 310,000 units. That's a third less than the already disastrous 2024.
Unbelievable. What does that mean for the people on the ground? What's the human cost here?
It's severe and immediate. The sources state that almost half, nearly 50% of all Stellantis employees in Italy are now on some form of state-funded short-time work or temporary layoff.
So the factories are just sitting idle.
For weeks, even months at a time. Mirafiori had shutdowns that stretched all the way from mid-September 2024 right into January 2025. Just nothing happening.
That's a perfect transition. Let's look at the anatomy of this plant by plant, because this is where it gets really interesting. Mirafiori in Turin. That's ground zero, isn't it?
Ground zero is the right way to put it. It has become this tragic symbol of the crisis. Production there collapsed by 70% in 2024.
70%.
Yeah, and the 2025 data just confirms it. Only 18,450 vehicles in 9 months. The main culprit is the electric Fiat 500. The source says it's struggling to find takers.
Okay, so the entry-level EV isn't selling. What about the other end of the spectrum? The high-margin luxury cars.
That situation is even more critical. If you look at Modena, the home of Maserati, we're talking about icons like the MC20, the Gran Turismo.
Right.
In the first 9 months of 2025, they produced just 75 cars.
75.
75 vehicles, a 65% drop. It shows the demand problem isn't just about affordable city cars. It's hitting the whole range.
Okay, so where is production actually happening? There must be an anchor somewhere. Pomigliano?
Pomigliano is the anchor, yes. It's
Yeah.
the most resilient site, making up about 60% of national production, but even it's down 35% in 2025.
And what's keeping it afloat?
The good old Fiat Panda, the classic combustion city car, that's still clocking solid numbers, around 79,000 units, but its sister models, they're in free fall.
Such as?
The Alfa Romeo Tonale collapsed 41%, and the Dodge Hornet, I mean, that's an almost total evaporation of demand. It dropped 90%.
90%, that's basically a market rejection. And Melfi, historically a huge plant.
Melfi's production is halved. Massive pressure there. And this is where the sources give us a really critical insight.
Go on.
The union, FIM-CISL, has come out and openly welcomed Stellantis' decision to add hybrid versions to models that were initially planned as 100% electric.
So the union is actively pushing for less pure EV production.
Exactly. They called the move vital for employment in the face of weak demand for electrics. And that detail really sets up the structural causes of this whole crisis.
It does. It points directly to factor number one, weak demand for these expensive EVs.
Precisely. The affordability gap is just too wide. The sources point to the Fiat 500e. It's a great little car, but it starts at nearly 35,000 euros.
Yeah, that's a lot of money for a city car.
For most people, it's just out of reach. You combine that price with, shaky charging infrastructure and these constantly changing subsidies, Buyers just decide to wait.
And then there's factor two, which sounds like a regulatory squeeze.
It's more than a squeeze, it's a hard deadline with huge financial penalties. Car makers are scrambling to meet these super strict EU FUGO targets for 2025.
And if they miss them?
The fines are enormous, potentially hundreds of millions of euros. So to avoid those fines, they're actually halting production of higher emission cars, even if they sell well.
So they're literally stopping production lines to avoid fines that are bigger than the profit they'd make.
That's exactly what's happening, and that instability makes any kind of long-term planning almost impossible.
Okay, and the third piece of this perfect storm, the global headwind, Chinese competition.
It's not a headwind anymore, it's a structural reality. Players like BYD and Geely were just leveraging massive scale and aggressive pricing. They grabbed 25% of Europe's EV market in 2024.
And that's up from the year before, right?
Up from 19.5%. And to give you a sense of scale, BYD alone sold over 4.2 million electric and hybrid vehicles globally in 2024. European car makers are just being overwhelmed by the volume.
So with this three-pronged threat, the Italian government felt it had to do something drastic.
They did. They rolled out a massive national intervention package. The new incentive scheme, formalized in August 2025, allocated nearly 600 million euros to stimulate demand.
600 million. How did they target that money?
It was very targeted. For private individuals, you could get up to 11,000 euros for a new battery electric vehicle. But, and this is key, it was tied to scrapping an old polluting car.
And also to income, I believe. There was something called an IZ score.
That's right. The IZ is basically a metric for household wealth in Italy. To get the full 11,000 euro bonus, your household had to have an I score under 30,000 euros.
I see. So the biggest discounts went to the lower income families who needed them most.
Exactly. And it wasn't just for consumers. Small businesses could also get big incentives, up to 20,000 euros for electric commercial vans.
So the big question, the money hits the market. Did it work?
It's what the sources call the December paradox. The impact was, well, it was immediate and explosive, but very localized.
What do you mean?
In December 2025, EV registrations shot up by 107% compared to the year before, just vertical. For that 1 month, BEVs hit an 11% market share.
So it worked. The incentive did exactly what it was designed to do.
It triggered a buying rush, yes. But the real question is, was it a fundamental shift or just a temporary reaction to a huge discount?
And the annual numbers tell that story.
They do. Despite that massive December spike, the overall market for the year still closed down 2.1%, and the annual BEV market share only hit 6.2%.
6.2%, which
Yeah.
is way behind the rest of Europe.
Far behind. The continental average is almost 17%. So the incentives created a surge, but they didn't solve the underlying adoption problem.
And if people aren't buying BEVs, even with the incentives, what are they buying?
They're buying hybrids. Mild and full hybrids grew almost 8% in 2025. They now make up over 44% of the entire Italian market.
Wow, that's the real winner.
It's the compromise solution. It offers efficiency, but without the high price and the range anxiety. It's what the market is actually choosing.
Which brings us to the path forward. All of this pressure lands on Stellantis and the unions. I read about a pretty intense meeting with the new CEO in late 2025.
Yes, that meeting on October 20th with Antonio Filoso was critical. The unions basically went in and demanded a clear industrial plan for every single Italian plant. There's a massive fear of job losses, and it's all focused on one place in particular, Termoli.
Right, the Termoli issue. That was supposed to be a new battery gigafactory, wasn't it? Securing thousands of jobs.
The plan was for 1,800 jobs, but now the unions are warning that the gigafactory project is suspended.
Suspended. So what's the new plan?
Stellantis has promised to produce new EDCT gearboxes there instead. Those are the high-tech transmissions for hybrid vehicles.
Okay, but I imagine the job numbers don't quite match up.
Not even close. You're swapping a promise of 1,800 jobs for maybe 250 to 300 jobs making gearboxes. It's a huge employment deficit.
And that signals Stellantis is betting on hybrids, not pure EVs, for the immediate future. It's a cost-cutting move.
It's a strategic pivot based on risk. A gigafactory is a massive investment into a market that's still weak. Gearboxes for the booming hybrid market. That's a much safer, cheaper bet right now.
A painful one for the workers, though. Now, despite all this negative data, were there any bright spots for Stellantis' brands in 2025?
A couple, yes. Alfa Romeo actually had a great year. They closed up over 23%, so they managed to buck the trend.
And the other one?
The other one is more of a warning sign for the industry. The Chinese brand BYD entered the top 10 for registrations in Italy for the first time in December 2025.
There it is again. The competition isn't coming, it's already here and climbing the charts.
Exactly. And the 2026 forecast reflects this. Experts see a slight recovery, maybe 5%, but they say it'll be driven by new competitive models and, quote, the legitimization of these Chinese brands.
So what does this whole Italian crisis signal to the rest of Europe? It feels like a massive warning flare.
That's precisely what it is. The message from the sources is crystal clear. If European car makers can't get their costs and pricing aligned, and if policy keeps zigzagging, they risk being squeezed out of their own home market.
And the human cost of that could be huge.
The union primed perfectly. They warned that the ecological transition risks being socially unsustainable without a common European industrial plan. The industry, they say, has to rethink how they build, price, and sell mobility itself.
So to sum it up, we've seen this historic production collapse. It's driven by expensive domestic EVs and overwhelming global competition. The government responds with a massive incentive program, which works in short bursts but doesn't solve the core problem.
It's a temporary financial fix for a foundational industrial problem. And that conflict is the ultimate takeaway here.
Go on.
The data proves that while consumers will absolutely jump on an EV when the subsidy is aggressive enough, we saw that with a 107% surge in December, they consistently choose affordable hybrids when left to their own devices.
Right.
So, considering those strict 2025 CO2 rules are now here, it raises this profound, unavoidable question. How long can Europe afford to rely on these temporary bonuses to bridge the huge, persistent gap between policy mandates and what the customer can actually afford and use? What stands out to you as the most unsustainable part of this whole transition right now?